Alright guys, so today what we're going to be going through is just one question, right? Going over how to prepare a single step and a multiple step income statement. Okay? I feel like it's important to show you guys this just in case, any of you are, still confused about how to actually prepare these kinds of statements. And I know that, in the lecture videos I made, there's just never enough time to prepare one along with you guys. So I just want to take the opportunity now and to prepare some really quickly. Okay, so as you can see, we have the income statement information here for the Sarwar Corporation, and it just lists out a bunch of stuff for us. Gives us some admin expenses, giving us a loss from a flood after tax, $5,000. Tells us our sales, interest expense, and an inventory, purchases, dividend revenue, loss from sale of equipment, beginning inventory, selling expenses, freight in, purchase discounts, and sales returns and allowances. The question also tells us our income tax and that we follow ASPE. Okay, so two things the question is asking us for here. Prepare the multiple step income statement, classifying expenses by function. And then we have to prepare a single step income statement, classifying expenses by nature. So let's start with part A here. Okay, preparing the multiple step income statement by function. Or, well, by classifying expenses by function. Okay, so first thing we're always going to start with is our header. So we are the Sarwar Corporation. So Sarwar Corporation is our name. We are preparing a income statement, and the date doesn't really tell us the date, so in that case we're just going to assume it for the year ended December 31st 2015. Okay, and I'm just going to reduce the spacing on that here just so that it looks a little bit prettier. Can I make that single space too? Yes, I can. Okay, so with any kind of income statement, really, the first part you're always going to start with is your revenues. Okay? And usually with revenues, at least on the multiple step, is we're going to want to calculate our net sales right away. So what we do to do that is we're actually going to use our sales account. And remember that net sales equals sales minus sales returns and allowances minus by sales discounts. Okay, I hope you can recall this. So always in our revenue section, we're trying to calculate net sales. All right, because the revenue section of the multiple step income statement, right, what we're showcasing here is our operating revenues, are things that, happen on a day-to-day basis. Okay, so this usually includes sales, sales returns and allowances, and sales discounts. So we're going to look for those three accounts. So as you can see, we skim through the list. We do have sales here of 1.9 million, and we have sales returns and allowances of 233,000. So no sales discounts I can see, but we have sales and sales returns and allowances. So let's just plug that in there. Sales of 1.9 million. And then sales returns and allowances is $233,000. Okay? So as I mentioned, seems to be no sales discounts. So from that, we can actually calculate our net sales. And I don't know why there's a space there. There really doesn't need to be. I'll just get rid of that. Okay? But I'll bold the title there so you can tell. So our net sales, right, is just going to be $1.9 million subtracted by $233,000. So our net sales is going to be $1,667,000. Okay, so that's how you do your revenue section. And then, so I'll just get rid of this formula here. And then right after revenues, what we always do for multiple step income statement is we do our cost of goods sold. Okay, so I'll just put that there. It's its own separate title. And with cost of goods sold, we're going to have to calculate it. So again, you know how revenues, we're looking for net sales? Well, cost of goods sold, we're trying to calculate, of course, cost of goods sold. And hopefully you'll remember the formulas here. But cost of goods sold actually equals beginning inventory, so I'll just call that BI, plus by net purchases, subtracted by ending inventory. Okay, that's how you calculate cost of goods sold. And net purchases actually have their own calculation. Net purchases actually equals same thing as net sales, actually. You know how net sales was sales minus sales returns and allowances minus sales discount? Same thing here. Net purchases equals purchases minus purchase returns and allowances minus by purchase discounts. Okay? But there's also one other little twist here with net purchases, and we actually add in this thing called freight in. Okay? Freight in actually is added to this calculation here. Okay? A lot of people don't know this, and they don't realize it, don't come across it, but it actually does sneak its way in, and that's one way that net purchases is calculated, just slightly different than net sales. Okay? But basically, this is how we're calculating cost of goods sold. Beginning inventory plus net purchases minus ending inventory, and net purchase equals all of this. So we want to go up and just look for these accounts, see what we can identify and see what we can piece together. So as you can see here, we have our ending inventory account, $30,000. We have a purchases account of $1,210,000. And then what else we got? Our beginning inventory, $230,000. Freight in, right? There it is. The tricky one itself, $110,000. And we have purchase discounts of $340,000. Okay? So it seems that we have all these accounts. We have beginning inventory. We have ending inventory. It doesn't give us net purchases, but it gives us purchases. It gave us purchase returns and allowances and freight in. Again, no purchase discounts. Okay? So the way that we prepare the cost of goods sold section is we start with our beginning inventory. Okay, so let's go find out what that was again. Beginning inventory was somewhere around here. $230,000. There we go. $230,000. Oh, it's losing my single space here. I'll have to adjust that after. And then we always put in our purchases after. Purchases are $1,210,000. All right, so let me just put that in, $1,210,000. And then after purchases, we're going to actually put in less, right? Because we're going to subtract. This is where we calculate net purchases. Less purchase returns and allowances. And this was, oh, my bad. It's not purchase returns and allowances we have. It's actually purchase discounts we have. Oh, sorry for the confusion there. So, in fact, we have all the accounts. We don't have purchase returns and allowances. We actually have purchase discounts. My bad. But still, same idea here. Less purchase discounts, which was $340,000. So I'll just put in the brackets there for it. And then we're going to add our freight in. Okay, we add our freight in. And our freight in was $110,000. Okay, so let me just change the format in here. Single space, remove space after. There we go. Okay, so right in here we have purchases, less purchase discounts, add freight in. So we're just going to, sum these together to figure out our net purchases. Okay, so once we go through all, if we do the calculations there on a calculator, we actually get net purchases of $980,000. Okay? And now, what we're going to be calculating is this term called cost of goods available for sale. Okay? So this is something we like to include on the income statement here in the cost of goods sold section. If you take beginning inventory and then add net purchases, you actually get this term called cost of goods available for sale. Beginning inventory plus net purchases equals cost of goods available for sale. Okay? It's just something you're going to have to memorize because we always record it next after we calculate net purchases. So we're just going to take beginning inventory and plus by net purchases. It's going to give us our cost of goods available for sale of $1,210,000. Okay, and again, I have to change the format in. This is going to be annoying throughout this whole thing. Oh, it's giving me a hard time right here. There we go. Okay. Now, after our cost of goods available for sale, this is where we can finally, subtract our ending inventory. So less ending inventory. And we just add this in here if I can spell it correctly. And our ending inventory was, it's up here, $30,000 right there. Okay, $30,000. This is going to give us our, and then finally, we can calculate our cost of goods sold, which is, of course, our cost of goods available for sale, subtracted by ending inventory. Okay. Again, let's reformat this. Okay, and then I'll sum all these up. Okay, our cost of goods available, our cost of goods sold is just going to equal, cost of goods available for sale, $1,210,000 subtracted by $30,000 of ending inventory. It's going to give us $1,180,000. So there's the cost of goods sold section. So it's annoying, it's long to prepare, and if anything, you're really just going to need to memorize exactly how it's laid out here. That's the way I learned it, and it's probably the best way for you to learn too. Just memorize the layout and how it works, right? If we were to have purchase returns and allowances, you just add a line right here and do less purchase returns and allowances, okay? You would include it in your net purchases calculation. Other than that, this is as complicated as and as long as a cost of goods sold section would get, okay? The next step on the multiple step income statement is to calculate your gross profit. Why is that underlined? Okay, let me just fix my spelling there. Get rid of that underline so no one's confused. I will bold it for you. Gross profit equals our revenues subtracted by our cost of goods sold. So we have a gross profit here of $487,000. Oh, now that's bold too. That's lovely. Okay, so there we go. That's how you do gross profit. Next step is to put our expenses. And this is actually where we're going to put in our operating expenses. So things that would commonly, the company would commonly incur throughout the year on a day-to-day basis. It's our operating expenses. I'm just going to get rid of these calculations here. We no longer need them. Now, I hope you remember from the lecture videos, or at least from class, that there are two kinds of expenses, same thing with two kinds of revenues, right? Operating and non-operating, okay? Operating expenses are things like your admin expenses and your selling expenses. And your non-operating expenses are like things like your interest expense or like loss from flood. Those are like the random expenses that we record later on, okay? So this section right here, the first expense one, is our operating one. And if we remember from the question, it's asking us to classify it by function. Okay? Classifying it by function means that we're going to classify it by selling expense and admin expense. So, thank God, right? It's actually organized perfectly here for us. Because that's by function, right? By admin and selling. We're separating it between the two functions. So, we'll do selling expense first. Okay, so selling expenses. So first one here, or we'll just actually do all three. We have salaries and wages, depreciation, and advertising. So we'll just add all that in. Salaries and wages. We have depreciation. Oops. What was the other one? Advertising. Advertising. Okay, we just format that all good. Remove the spaces here. Put into one thing. Okay, there we go. So salaries and wages is just $56,000. $56,000. Depreciation is just gonna be, where is it gonna be? Depreciation is $70,000, and then the other one I believe is $22,000. $22,000 advertising. Okay, so basically plugging it all in here, and then what we're going to do, actually, my bad, these should be listed over here in this column. It doesn't really matter what columns you're going to put your numbers in, but it does help to have, or to memorize a certain pattern so that it flows better and looks nicer. So now we're just going to have our total selling expenses. All right, let me just type this in here. Total selling expenses, I'll put this in the other column here. We add all these up, our total selling expenses amount to $148,000. Okay, the next one we're going to include is just going to be our admin expenses. Okay, and I believe we have salaries and wages, depreciation, and insurance. So salaries and wages, depreciation, I spelled that wrong, depreciation, spelled it wrong again, and I think the other one was insurance. Okay, spelled that wrong. Okay, come on, man, get it together. That's wrong as well. Ugh, too much pressure. Too much pressure. Okay, format this correctly here. Luckily, you guys won't have to do that when you're preparing it by pencil. Doing these statements on the computer is such a pain in the butt, let me tell you. Okay, so our salaries and wages. Let's just pull it up here. $110,000. Depreciation, $35,300. Oh my God, wrong line. $35,300. And then our insurance expense is $12,400. Okay, $12,400. Then we're going to figure out what our total admin expense are. If we add all these up, we're going to get, what are we going to get here? Let me find it. $157,700 is what we're going to get. Okay? So we have our total selling expense. We have our total admin expense. Now we can figure out our total expense. So total expenses is simply just going to be $148,000 plus by $157,700, giving us $305,700. Okay, let me just add the total here, and again, let me just format this here for you guys. Oh, formatted that wrong. All right, there we go. Total expenses are done. Thank God. Okay, we're almost halfway done the statement, actually. So as you can see, these multiple step statements are long. Okay, so as I mentioned, right, these revenues are operating revenues. These expenses are operating expenses. Therefore, the next thing we calculate is our income from operations, which is just simply our gross profit minus by our operating expenses. So $487,000 subtracted by $305,700, way too many zeros there, is $181,300 worth of income from operations. Okay, so now we're done the operating section of the income statement. Now we can do the non-operating section. Okay, so well, first again, we always start with revenues. So this is where we record our second revenues, our non-operating ones, and we call these other revenues and gains. Okay, so let's go take a look at what we got up here, what kind of other revenues and gains we have. So we've already done an admin expense. Loss from flood, that's an expense. Sales, that's sales, we already dealt with that. Interest expense is, an other expense. Purchase and inventory. We do have dividend revenue. Now that is a other revenue and gain. That's a non-operating revenue. We don't incur usually dividend revenue on a day-to-day basis. Do we have any others? Loss from sale of equipment? No. Begin inventory? No. We already used this, this, and this. So only one seems to be our dividend revenue. So dividend revenue. So our dividend revenue was $98,400. Okay, so we just add that in. I'll just put this in appropriately here. Remove the space. There we go. So yeah, that's that's pretty straightforward for other revenues and gains. We only had one. Now we'll do our other expenses and losses. Let's see what we have here for other expenses and losses. We have this loss from flood, right? That's a non-operating expense. That doesn't happen every day. interest expense as well, doesn't happen every day, and loss from sale of equipment. Those are our 3 non-operating expenses, okay? So we'll start with the loss from sale of equipment of $2,000. Loss from sale of equipment, and that is $2,000. And then we also had this interest expense of $22,000. So let me just put that in here. Interest expense, $22,000. And then our last one was this loss from flood. Now, this one is actually going to be very interesting, okay? Let me just format this again really quickly here. Okay. Now, yeah, so, let me just add in these bold headers here also, so it's much easier for you guys to follow along. There we go. Hopefully that helps. This is loss from flood, right? It's $5,000, but so important for you guys to realize and notice it's after tax. This is an after-tax figure, okay? I cannot stress how important it is for you to realize this, okay? Now, if you know anything about income statements, right, you know that we do our operating revenues, we do our cost of goods sold, right? We're going to do our operating expenses. So then we've done our non-operating revenues, our non-operating expenses. After we've done, our operating section and our non-operating section, what do we do next? Well, we do our income tax. We calculate our income tax next. So, all these numbers here before income tax need to be reported before tax, pre-tax, right? So that we can calculate our income tax later in the statement, right? Because income tax is going to go somewhere down there, right? For however much. So we can't be, reporting this net of tax. It doesn't make sense. We have to take the tax out of this $5,000. Okay? And how do we do that? Well, our tax rate was 30%. So in order to figure out what the pre-tax figure was, we're going to have to take the $5,000 and we're going to have to divide it by 1 minus the tax rate, which again is 30%. So it's $5,000 divided by 1 minus the tax rate. So 1 minus 0.3. Okay? AKA 0.7. Okay? A little bit of a weird formula there. Hopefully you guys can memorize that and understand it because it is so important. And if we follow through, we'll figure out that the pre-tax loss from the flood is $7,143, okay? So that is one of the biggest curveballs that they'll throw at you on, the exam. Because preparing an income statement, once you've memorized the formula or the format, simple enough. But this right here, this is a curveball, a nice curveball that they'll throw at you without any hesitation. So it's important to understand what it is, okay? So now we've dealt with our other expenses and losses. We can total it up. Total other expenses and losses. We add all 3 of these things up. Going to give us our total loss of $31,143. So now we've, done our non-operating revenues and we've done our non-operating expenses. So now what we're going to calculate is our income, in capitals there, our income from non-operating activities, okay? Up there, we calculated, where is it? We did our income from operations, because this is our operating section. Well, this is our non-operating section, so we're going to calculate our income from non-operating activities, okay? And that right there is just going to be our $98,400 of, non-operating revenue, subtracted by our non-operating loss of $31,143. So we get $67,257. Let's add a little something here. Next, like I mentioned, this is where we do our income tax, okay? First thing, though, is we want to figure out what our net income is before tax. which is simply just going to be our income from operations. So plus by actually our income from non-operating activities. So we add these things together, gives us our net income before tax, $248,557,000. Okay? Then we do our income tax. Our income tax is 30%. So we're just going to multiply $248,557,000. Sorry, $248,557. We're going to multiply that by the tax rate of 30%, right? Is going to give us income tax expense of $74,567,000. And we finish off the statement here with our net income, right? Okay, let me just tab over here. Our net income of $173,990. All right, so let me just bold that there for you. And that is how you finish the multiple step income statement. As you can see, it takes up a fully typed page here. This thing is absolutely monstrous. And you know, it's long, okay? And on the midterm exam and stuff like that, you're not going to have a lot of time to prepare this thing. So I really, emphasize and suggest that you memorize, the layout of the statement and how it's prepared, okay? Now you've seen me prepare it, so hopefully when you prepare it in the exercises, you'll be able to draw off of this. One last thing though, before we move into part B here, which is preparing the single step here, is that I just want to talk about, ASPE and IFRS. In this case, it was ASPE, so this is how the multiple step income statement here looks like. If this was IFRS, there could also be another section here of, comprehensive income, or other comprehensive income, I should say, and you would also be expected to calculate EPS at the end of it. Usually in the question, it would give you the number of common shares outstanding, and in that case, you have to calculate EPS at the end. Okay, in this case it's ASPE, so we don't have to do that. In the future questions to come, though, I will go over a multiple step income statement with IFRS. Okay, so that's part A. Let's do part B here. Okay, part B is the single step statement, classifying expenses by nature. So again, we start off with our header. I'm just going to copy and paste it over there. Look how efficient I am. Why did that change the centering though? Oh, alright, whatever, we'll go with that. Okay, so obviously we're going to start with our header again. Company name, statement kind, and the date. Okay, and as always, you always start with revenues. Okay, but remember that on the single step statement, unlike the multiple step, who separates, the revenues from operating and then non-operating, and separates expenses between operating and non-operating, the single step combines it all. So we just have two sections, our revenues and expenses. And in the revenues, we actually include all of our operating and all of our non-operating revenues right in there, okay? So there's no two separate sections. So this revenue section is actually going to have dividend revenue, and it's going to include net sales. One other thing to note is that the single step actually doesn't show the calculations for net sales. It actually just lists net sales right on it. The single step statement is all about efficiency and showing everything with as little work as possible, okay? So we don't care about showing these two accounts. We just want to know what net sales is. So right away, we're just going to throw in the statement, net sales, okay? We don't have to show sales or sales returns or allowances at all. So easy enough. And again, that's our operating section of revenues. But we also are going to include our non-operating dividend revenue here. So dividend revenue, which is $98,400. We add these things up. We'll figure out what our total revenue is since we have no more revenue items. Total revenue is just going to be $1,765,400. Okay, so let me just format this again here for you. All right, let me do that, make it clear, and I'll bold this. Bold the revenues title. Okay. Next, so that's revenues. Next thing is expenses. Now, again, remember, we don't have to separate expenses. We're going to include all of our non-operating expenses all of our operating expenses and all of our non-operating expenses. Also, cost of goods sold doesn't have its own separate section on the single step. It's actually an expense, and we treat it as an expense. Okay, so we're just going to write in cost of goods sold. And you'll like this part right here. Again, same thing with net sales. We don't have to show all these calculations. With cost of goods sold, we don't have to show all this crap. We can just jump straight right to the point that cost of goods sold is $1,180,000. So we're going to go ahead and do that. We're going to gladly skip all those steps. Good for us. Okay, so straight to the point. Now remember, it wants us to classify expense by nature and not by function. So by function means that you split it up between the sell-in function and the admin function. By nature means that you split it up based on what the expense actually is. So in this case, what the expense actually would be is salaries and wages. And the salaries and wages is actually going to be $110,000 plus $56,000. I hope you catch what I'm saying here. By nature is the nature of the expense. Okay? And so the nature of the expense is salaries. And we're not going to now split salaries between admin and sell-in. We're not going to be splitting between those two functions anymore. We're going to combine it together. Same thing with depreciation. Depreciation will no longer be listed twice as $70,000 and $35,300 separately, but we're going to combine it together. Okay? So, you'll see what I mean here in just a second. So, for our expenses, first one is salaries and wages. And since it's not by function, it's by nature, we're going to combine it. So, before we had $56,000 and we had $110,000, well, we're going to add it together to give us our total salaries and wages of $166,000. Same thing with depreciation. Okay, depreciation before was listed twice, $35,300 and $70,000. So we're just gonna add these together, $35,300. I think it's 300, and this gives us a total of $105,300. And then what are our other expenses here? There were advertising. Is there another advertising one? No, there's not. And we also had insurance. Okay? So the advertising is $22,000. Advertising is $22,000. And then we also had insurance there. And insurance is $12,400. Okay? Now, of course, these are all of our operating expenses. But of course, a single step, we don't care about splitting between operating and non-operating. So we're also going to include all of our non-operating expenses in there. So our loss from sale of equipment, interest expense, and loss from flood. Loss from sale of equipment, interest expense, and then loss from flood. So what were these numbers? Loss from sale of equipment, $2,000. Interest expense, $22,000. Oops. Let me put that in there. $22,000. And loss from flood, $7,143. Again, on the single step statement, somewhere below, we're going to actually record income tax. Right? Income tax will be deducted later on. So all these numbers need to be reported before tax. So again, you would have to do this calculation here, right? The flood amount pre-tax divided by 1 minus the tax rate. So it's going to end up being the same here, $7,143. And with that, that covers all of our non-operating expenses and all of our operating expenses. So we can finally add these up to figure out what our total expenses are, which in this case is $1,516,843. Okay? Oops. Now let me just organize this here really quickly so it's more pretty to look at. Oops. Click the wrong one. Give it a little total there. And there we go. Now, all we're going to do here, we have our revenues, we have our expenses. Just going to calculate our net income before tax, right? That's what we're going to be looking for anyways, because the last thing to do now is our tax after this. So net income before tax is just going to be our revenues minus our expenses. So $248,557,000. And then, of course, we're going to be doing our income tax expense next, right? That's the last thing before, figuring out our net income. So, simply going to be our net income before tax times by the tax rate of 30%. So if we do that, we figure out our income tax is $74,567. And this gives us a net income here of, let me just figure it out, of $173,990. All right, so let me just total this up here, give it a nice little bold, and there we go. That's our net income for the single step statement. As you can see, it is the same under both methods. Single step statement, $173,990. Multiple step, again, $173,990, okay? So as you can see, single step is the much preferred way to do things. It is so much more easier and simple and straightforward. But unfortunately, usually on the tests and stuff, they're going to make you do the big one. Of course they are, right? But just know how to prepare both. And honestly, a lot of what this is going to come down to is just practice and memorization. Hopefully, though, from this video, you've got the basics down now and you have an idea of where things are supposed to go, so that when you're presented with this big list of givens here, you understand exactly, somewhat what to do with it, okay? And biggest takeaway from this is to know that if they're given stuff after tax, make sure to calculate it pre-tax if you need to. In this case, we had to for loss of flood, since loss of flood is presented before we calculate our income tax. Okay? Super important for you to know. Hopefully that helped. All right, and I'll catch you guys in the next video.